Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, April the 22nd. The year is 2024. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And just to let you all know I was okay, my phone has been acting up, as I told you last week, and a new one should arrive later this week, courtesy of Verizon. It's nice to get the number of corporate office on these big companies, because usually the people that answer the phone there have the authority and at least two brain cells on active duty communicating with each other to understand what you need and get you what you need when you need it. So, to the charts, we're looking at the weekly chart here, and you can see the dashboard says there's 2 pound pairs that haven't, let's see, 2 pound pairs and a New Zealand pair that hasn't filled the gap. We are 65 pips below the weekly open, 89 off the high and 2 off the low, and the pound did fill the gap down. If we zoom out to the monthly, we can see we are 320 pips below the monthly, the monthly open again. We are 406 off the high and 1 off the low. Whoops, went the wrong way. And we're putting in the opening range for the week, which is about 90 pips. We're right at the weekly low. Looks like we might even move slightly lower. For the year, 419 pips below the yearly open, 592 off of the high, and we are sitting at the yearly low at the moment, 123.01. So I guess we're going to test that 123.00 and then bounce. We had an inside bar on the daily 5 days ago, and we are 127 pips below that inside bar low. We've only got a handful of inside bar action here. Looks like on the month we've got a handful. In the week we've got about a handful, and on the day. So inside bar traders, you're going to have to pick your pairs and wait. We have 5 pips. We have 5 pairs, 100 pips or better in range, with the pound New Zealand, what I like to call the new beast, leading the way. And looking at the buy zone, you can see in the Asian session, and looks like looks like the Asian session, you could have made a few pips to the north. Then coming into the London session gave you about 3 opportunities to make pips heading to the south, and that was about 60 pips ago. So anybody who was short off of the buy zone or the weekly open crossover got paid off. Green rats, looks like it's time to feast. Be careful. Looks like we did break the 123. I've got a 122.996 low at the moment. So you know when it breaks it going down, it usually hits the 95, then the 90, then the, 85, 75, then down to 60, and then down to 50 in the launch pad. That's usually where you see the movement. Bambino Flex indicator said to go short. Price near the pivot was a short. We haven't hit there. Said price near S1 was a long. We crashed through that. In fact, we've got S2 at 1.2300. So we're right at S2 for the pivot traders. We missed today's pivot up at 24.01, so that might stay a missed pivot for a while. On the weekly, We missed the pivot to the upside, 124.11. We've got two missed pivots in a row so far on the weekly. And I think out of what, 5,000 pivots, I think is what we're looking at. We've only had two misses in a row. It looks like about 58 times. So it seems like it's a rare occurrence.
And what happens on rare occurrences?
What happens?
We can make money. We can make money.
Yeah. But I would I would stay short unless it goes back across that weekly open. I'd be looking for shorts. And speaking of shorts, in and out of that lower daily wick zone. Yeah, Walmal?
Yeah, I was gonna agree with you. You know, and I had mentioned to you earlier, you know, that Fibonacci we had talked about, you know, a couple of times on this channel, that, you know, from last year's low until the high that occurred as well. You know, we're sitting right now at the 23.6 percentile right now. So it's only 23.6% above the low of the last year, which is not the low of the year, but going back 12 months, you know, and actually you can probably take it back much further than that. But the point being is that we're sitting here in an area that, you know, we still have more room to fall. I mean, it could fall another, you know, basically 200 and something pips. But the thing is, we're starting to get into that area where the Fibonacci boys say, hey, we've gone way too far. We extended way too far. We need to sit here and think about this. And you just look at a daily chart. Okay, my goodness. I mean, we have over the last, roughly 30 days or so, you know, from that high that we had up there to where we are now, that's a drop of 585 pips. I mean, that's a huge drop, a huge turnaround. And remember, guys, that, you know, yeah, we had 93 pips so far range today, and 100 pips, you know, on Friday. But most of our days have only been 50 pips and 60 pips. They've been small days, and every once in a while we'll have a big day, a big drop, you know. But for the most part, you know, it's only 50, 60 pips. So this is a consistent move, you know. And yeah, there's been some ups and downs because that's the market doesn't move from point A to point B in a straight line. But the point is, it's been a consistent drop, just like the consistent, you know, up movement that it took, you know, several months ago on the way up to that area. So the point being in all this is that, okay, we're in something right now. We're starting to get to a point where, you know, like I like to say, you know, when you get to a midpoint or something, it's time to start looking, or at least be cautious. Well, that's what I guess I'm saying. It's start to, you know, is this market now oversold? We have to start thinking about it. You know, there's a huge return bar that got put up. Let me tell you, I can tell you when it got put up on the daily chart. It got put up on November 3rd. You know, and we're right now at about the midpoint of that candle. You know, so there's a lot of things out there that are saying, okay, guys, yeah, we're still dropping here, but let's go pay attention. Let's not get over anxious about this and get squashed.
Yeah, I noticed something here. I've got the smart ranges up. And for the daily close minus low, the past two, we had I guess Friday's close was 5 pips above the low, stayed in the rat zone. The two trading days ago, Thursday, it was only 3 pips. So it stayed in the rat zone. And right now, we're 3 pips off that daily low. So we're still in the rat zone, but we've got a lot of time left on the clock here. So it's going to be interesting. But that's and then on the weekly, last week we were 5 pips off the low at the close. So that's something that we usually don't see because price usually comes out of that rat zone.
Yeah, it likes to go back towards the middle a little bit, but
Yeah.
it's not what we've seen over the last couple of days. Now, earlier in last week, yeah, we saw that, but for the most part, we really didn't. And it's that's again, that's a market that's extending itself. Well, when the market extends itself in a particular direction, eventually it comes to an end. Especially like what I was just saying, we're starting to get to some areas that a lot of traders, and when I say traders, I mean big money traders, what they used to call smart money traders, right? Those guys start paying attention to those numbers, because that's where they put their stops in. That's where they put their target prices at, and it causes the market to sometimes make an abrupt move at that point.
Hey, that reminds me, I should maybe pull out one of my smart money charts this week. Haven't thought about that indicator in a long time.
Yeah, that'd be pretty cool to look at.
Yeah, so looking here at the one of the simple charts here, we've got our horizontal lines every 25 pips, and we are bouncing off of that 123.00. So we'll have to wait and see what happens. And we're looking at the 30-minute chart at the moment, and we can see indicator 2 has been magenta for about the past 8 hours. So
yeah,
that's
my chart, it's been much longer than that. On my chart, it's been magenta for 17 hours, or 17 candles.
Your M30?
Right. Yeah.
Wow.
Yeah. Even the I got 2 green candles on it, but even they're still magenta, which is it touched it, but it didn't actually go and stay above it.
Oh,
but,
yeah, I guess, yeah. I've got 18. I just counted it.
Yeah, pretty cool. But but if you do look at the slope of the indicator 2 coming down, it's starting to what I call rounding off. In other words, starting to hit maybe potentially a bottom. But sometimes it does that and fakes out and then runs. Then the next candle after it goes and slams further in the direction, right?
Right. But it's just one of those things. It's, just to let those people know, indicator 2 is basically the EMA 5. It's a squiggly, but I had read an article, I forget how many decades ago now, that they said that was the best moving average to use. And so I just have it, the indicator 2 just is magenta if the close is below it, and it's aqua if the close is above it. And it's just one of those things where if you follow it, if you've got the intestinal fortitude, also known as guts, to follow that indicator, you could be in a trade for, like in this case, 17 hours and just let it ride. But then sometimes you can see at the beginning it was oscillating, and it's like, well, which way do I go? Am I getting chopped up? So it's just it's just a bias. It's nothing that you can use it standalone. I know there was one trader, trend trader, he would use it coupled with my dynamic support resistance, and he's made a few dollars because he was still is as far as I know, equity trader. And you can see here on a little Fibonacci off of the 3 balls here, we had a lowest high at 123.00 and prices moving up. And since I wasn't around on Friday, taking a quick look here at the accumulated range for the year, we're at 586 pips. And so for the month of April, that's the lowest in 20 years, but we still have a couple of trading weeks left. So we need to get above 649. That happened back in 2014 for it to be the lowest, or not to be the lowest. So, fellow traders, fastest 15 minutes in trading is up. If you have any questions, feel free to ask. And when you're at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.